after almost 4 to 5 days, I am getting multiple calls since we just have crossed 31st March 2025. Most of my colleagues, friends, relatives are asking me one question. So hopefully if you see this video, you will get the answer of it. So myself Surajit Ghosh, welcoming you all to my channel High School Commerce. Today we will discuss a hot topic which is generally people ask in this time, that is during the once their new financial year begins, whether they should opt for old tax regime or new tax regime of tax. So let's start today's video with a few content. In this video we will discuss the benefit of old tax regime, benefit of new tax regime, switching between old tax regime to new tax regime and new tax regime to old tax regime, and finally the conclusion. So let's begin. So let's first discuss the benefit of old tax regime. In old tax regime, Government of India has given certain benefit based on the expenditure incurred by the assessee. Means if an assessee is incurring some expenditure in some specific area, Government of India is allowing him certain deduction, and most of the deduction and as well as exemption as well. So if you see this section 80C is allowing a deduction up to 1,50,000 from your gross salary. Means you can claim 1,50,000 deduction from your gross salary, and your gross salary will get gross income in correction will get reduced by 1,50,000. Means you don't have to pay tax in 1,50,000, provided you are making investment in provident fund, employee provident fund. Those who are salaried employee, their employer are deducting this amount and depositing it to the respective authority. National savings scheme, life insurance premium paid in that year. Means if you have making advance payment or arrear payment, the moment you will make the payment, you can claim deduction under section 80C. Equity link saving scheme, 5-year tax saving fixed deposit. Some of my friends ask that if they make a fixed deposit of 5 years from any bank, can they claim deduction under section 80C? The answer is no. If you are making fixed deposit with bank, then you have to ask bank that I want to make a tax saving fixed deposit. Once you opt for it, in the fixed deposit certificate, you will find it is written tax saving. Means within 5 years you are not allowed to break it. So if you have made a 5 years tax saving fixed deposit, then you can claim deduction under section 80C. Along with that, if you are making any contribution to the pension fund, you can claim deduction under 80CCC, which also gets included into 1,50,000. If you are making any contribution to national pensions scheme system, that is NPS, up to 10% of your salary. If you are a salaried employee, then you are allowed to make up to 10%. If you are making over and above 10%, you are not allowed. Means your amount of contribution and 10% of salary, whichever is lower, you can claim as deduction in NPS. If you are not a salaried employee, then you have to calculate your gross total income, the 20% of your gross total income, or the amount of contribution, whichever is lower, you can claim, provided it should not be more than 1,50,000. And along with that, you can claim some additional benefit of 50,000 if you are making contribution to NPS. Now moving forward, there are some other benefit as well available in old tax regime. Post-COVID, we all are very much concerned about our health. So health insurance premium paid by individual, if up to 25,000 is allowed, and in that health insurance you can include yourself, your spouse and dependent children. There is no restriction of number of children. If you are including your parents in the same insurance plan, or if you are buying a separate insurance plan for your parents, then additional 25,000 benefit you can claim. Means 25 plus 25, total 50,000 you can claim as deduction in addition to the 1,50,000. If your age is 60 years, then this 25,000 will become double, that is 50k. Means if you are aging 60 years, definitely your parents, here parents means not both the parents, any one parents, if aging more than 60, then and you are making payment of their health insurance, then you can claim deduction of 50k for your parents and 50k for yourself. Total 1 lakh benefit of health insurance premium you can claim. In case if your age is less than 60, then you are allowed to take benefit of 25k, and if your parent age is above 60, then you can claim benefit of 50. So total 75k benefit you can claim under section 80D. Remember, this benefit is over and above the benefit you have claimed under section 80C of 1,50,000. Apart from that, there are certain people who used to purchase house taking loan from bank. In that case, the interest paid on housing loan for self-occupied property or let out property, you can claim deduction under old tax regime. Remember, if it is a self-occupied property, then restriction of 2 lakhs on interest payment is there, but if it is a let out property, there is no such restriction. Means you can claim anything. Now, apart from that, if you have taken any loan for higher education, and if that loan amount, if that loan is more than 8 years, then you can claim up to 8 years. Means 8 years or number of years of loan, whichever, suppose the number of years of loan is 7 years, then lower of this two you can claim as deduction under 80E. Under 80G, if you are making any donation to some specified charitable institution, then you can claim deduction, provided you have to meet certain condition. Apart from that, there are some other benefit as well. Suppose if you are earning any interest on your savings bank account, then you can claim deduction up to 10,000 or the amount of interest you are gaining on savings bank up in under section 80 TTA, which is over and above 1,50,000. If your age is more than 60 or 60 years, then you can claim benefit under section 80 TTB of 50,000. Means this 10,000 will change to 50,000 if your age is more than 60, and there are some relaxation as well, that you can earn that 50,000 interest on your savings not only from bank, from post office or any other cooperative society. Apart from that, there are certain exemptions are available while you are calculating your income from salary. For example, house rent allowance, relief trouble allowance, other special allowance, children education allowance. There are multiple allowances are there which you can avail if you are opting for old tax regime. So let's see how you need to calculate the tax on old tax regime. This salaried. For salaried employee, you have to add up all the benefit that you are getting from your employer in terms of perquisite, allowance, bonus, commission, as adjusted by the respective exemption, and from that you need to deduct standard deduction of 50,000. Since you are opting for old tax regime, you are allowed to take standard deduction of 50,000 or the amount of salary whichever is lower. By deducting the standard deduction, you will get the income from salary. Now, when it comes to the income from house property, it would be segregated into two parts. First of all is the self-occupied property. For self-occupied property, the annual value will be nil, and interest on housing loan is allowed as deduction up to 2 lakhs, means 0 minus 2 lakhs equals to negative 2 lakhs. This negative 2 lakhs you can adjust with other incomes such as income from salary. So there is a chance that if your salary income is 7 lakhs and your income from house property is 2 lakhs, then you can claim 2 lakhs as deduction and your gross total income will slash down to 5 lakhs. Now, if you have let out your property in rent, then the total rent received minus municipal tax value, municipal tax that you have paid, will be considered as annual value. From that annual value, you are allowed to take a standard deduction of 30% of the annual value minus the interest on housing loan, whatever may be the amount. It could be 5 lakhs, it could be 6 lakhs, it could be 7 lakhs, it could be 8 lakhs, whatever may be the amount you can claim as deduction under this head. And if it is coming negative, that you can adjust it with any other head. Capital gain, there is more or less same, not very much difference between old tax regime and new tax regime. There are two stages are there. One is short-term capital gain and long-term capital gain. Depending on the tenure of holding and the nature of asset, you have to pay the tax of 15% or 12.5% as the case may be. Now moving to the next section, that is income from business and profession. Income as per Income Tax Act 1961, you have to calculate the income from business and profession. I'm not going into the very much detail of it. Apart from that, there are certain presumptive taxation under section 44AD, 44ADA and 44A. As if you are eligible, you can calculate your tax on that basis as well. And the last one is income from other sources. Once you total up all these 5 heads, you will get the gross total income. From that gross total income, you have to deduct the deduction available under chapter 6A, which I have just discussed earlier in last slides. Once you deduct these deductions, you will get the taxable income or total income. That total income you need to calculate tax as per these slabs. That means 0 to 2.5 lakhs 0%, 2.5 lakhs to 5 lakhs 5%, 5 lakhs to 10 lakhs straight away 20%, and above 10 lakhs it is straight away 30%. That it is very straightforward taxation is there. Now after calculating the tax, you can claim rebate under section 87A of 12,500 if your income is 5 lakhs or less. Means anybody who is earning 5 lakhs or less, his total tax liability for the year would be zero. After claiming deduction under section 87A. Okay. Now moving to the next section, that is new tax regime. The benefit of new tax regime, the government of India giving opportunity to all the assessee of freedom, means government wants more cash to be given to the assessee's hand, and they are allowed to plan their future as per their choice. Now the assessee will get deduction straight away from their total income by reduced tax rate. However, there are certain benefits is available as well in new tax regime. Let's discuss few of them. Number one is 80CCD, an employer's contribution to NPS. If it is a government employee, then 14% of their salary or actual contribution, whichever is lower. If it is a private sector employee, then that limit of 14% goes down to 10%. Apart from that, 50,000 gift if you are making, you can claim as a deduction. Interest on home loan, if it is a let out property, then you can claim interest on home loan. However, if it is a self-occupied property, you are not allowed to claim any deduction. Means straight away your interest on loan, whatever you are paying to the bank, you are not allowed to take any deduction or exemption while you are calculating income from house property, so it would be zero. Transport allowance to individuals in special needs are allowed. Now moving to the new tax regime, tax calculation. If you are computing your tax under new tax regime, you have to add up all the benefits that you are getting from your employer. However, there are certain exemption which is very much restricted, not open as compared to the old tax regime. Once you add up all these benefits which you are getting from your employer, then you need to deduct 75,000 standard deduction. Yes, 75,000. In old tax regime it is 50,000. In new tax regime it is 75,000. So once you deduct the standard deduction from your salary, your income from salary is ready. Now moving to the income from house property. If your house property is self-occupied, then the total income from your house property would be zero. And if you have one or multiple house which you have given in let out, then the total rent received minus municipal tax value will be the annual tax annual value of the property, and from the annual value you need to deduct 30% as standard deduction and interest on housing loan. Here there is no such deduction, no such limitation. That means if it is a let out property, the calculation is very much similar in old tax regime and new tax regime. Basically both are same. Now there is not much change in capital gain, long term and short term, depending on the tenure of holding of the asset and the nature of holding of the asset. You have to pay, if it is a short-term capital gain, you have to pay 15%. If it is a long-term capital gain, you have to pay 12.5%. Along with that, the business profession income is similar. Here also you have to calculate the income from business and profession as per Income Tax Act 1961. Presumptive taxation benefit is also available under section 44AD or 44 ADA 44A, and then you have to add old tax, then you have to add the income from other sources. Once you add up these 5 heads, you will get the gross total income. Now from gross total income you have to deduct the chapter 6A. Here the chapter 6A or 80 series deduction which we have claimed in old tax regime is not much wider. It is very much limited, as we have discussed in the last slides. So once you deduct this chapter 6 deduction, you will get the taxable income. Now this taxable income, you need to calculate tax on it depending on the slabs. Means 0 to 4 lakhs, 0%, 4 to 8 lakhs, 5%, 8 to 12 lakhs. Means every 4 lakhs 5% increase of tax rate would be there up to 24 lakhs. Above 24 lakhs, all the income would be considered as 30% bucket. Now, if your income is 12 lakhs or less, then you can claim a deduction of 87A of 60,000. In old tax regime, it is 12,500 and income limit is 5 lakhs. But in new tax regime, this changed to 60,000 and your income limit goes to 12,000. So looking into it, most people are asking and concluding that new tax regime is better than old tax regime. I don't want to conclude now. For that, I would request you to continue watching my video. I will give that answer in my last slide. Now moving to the third section of this discussion. Can an assessee switch from old tax regime to new tax regime and new tax regime to old tax regime? The answer is depend on the nature of income you have in your bucket. For example, if you are an individual or HUF, Hindu undivided family, and you do not have any business income, remember, you do not have any business income, in such case, if you are having only salary income, you can switch between old tax regime to new tax regime freely in between the years. Individuals who have informed their employer at the beginning of the year, and nothing needs to be informed at the time of filing, also you can change the tax regime. For example, you have opted for old tax regime at the beginning of the year. Accordingly, your employer has deducted the TDS. However, at the end of the year, while you are going to submit your tax return, you decide that you will submit your tax return as per new tax regime, and whatever amount excess or lower is there, you will either pay or you will claim as refund. That is fully allowed. Now, there is a question that multiple people are asking: can a person change his regime from old tax regime to new tax regime? The answer is yes, but for that SSC have to file the return within the due date, that is within 31st of July. If he is making the payment, then he is allowed to claim the allowed to move from old tax regime to new tax regime. And for new tax regime to old tax regime, there is no such clause is written prima facie. Now moving to the next one, if somebody who is having the business income, if you have the business income, apart from the year from when you are moving from old tax regime to new tax regime, you are allowed to flip once in your lifetime. Yes, once in your lifetime you are allowed to move from new tax regime to old tax regime. That is once in your lifetime. Now, if you have exercised that, you are not allowed to move back to new tax regime until there is a cease. You have ceases the business income. For example, 2023-24, in this year you have opted for old tax regime, which you are continuing. In 24-25 you have opted for new tax regime. In 25-26, if you decide that you want to move into old tax regime, that is full and final. Now if you want to move back in 26-27 financial year to new tax regime, you are not allowed. Now what is the solution? In that case, there is a case that we can discuss. Suppose in 26-27 years, the business if you have business income, but in that particular you do not have any business income, you have income other than business income. Okay. So, since you do not have any business income in this year, you are allowed to move to new tax regime. Means you are allowed to flip from old tax regime to new tax regime. That time this is allowed. And in 27-28 financial year, again, once you have business income, this clause again gets activated for you. Means this clause again gets activated, and you are allowed to claim deduction, or allowed to claim deduction under old tax regime. Now the biggest question, that is, which one is best for you? This is the charter I have prepared for you, which will help you to conclude whether you should opt for new tax regime or old tax regime. There are two things you need to consider. Number one is the deduction, how much deduction you are allowed to claim or you can claim, and the salary income, how much salary income you have, 15 lakhs, 18 lakhs, 12 lakhs or 25 lakhs. Accordingly, if you choose the tax regime, you would be benefited. For example, if your income is 15 lakhs and you are claiming a deduction of 5 lakhs, it is better for you, you should stay in new tax regime. If you are claiming deduction of 6 lakh, no matter which option you are going, new or old, in both the cases the tax burden would be similar. But if you are claiming deduction on exemption more than 7 lakhs or 8 lakhs or 8.5 lakhs, it is better to stay in old tax regime. Similarly, you need to follow this concept if your income is 18 lakhs, 22 lakhs or 25 lakhs. So I hope I have given answer to all the questions that you have in your mind. Till my next video, I would request you to stay safe and enjoy, and don't forget to subscribe my channel, and please put a like in the video so that it encourages me to prepare more videos. Till my next video, have a safe life and enjoy your life. Thank you all.